Welcome back. I'm Pratap here. Today is the 22nd October 2024. In this video, I'm going to evaluate the performance of the high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community. So click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So in the video description, please search for our Telegram channel link and join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important update we will be providing at our Telegram channel. Now let's get into the analysis discussion. So yesterday, end of the day report, we have identified 4 high liquidity zones from daily and 75 minutes time frame. In that only one stock we got the trade, that is ABFRL, that is Aditya Birla Capital. This is a 75 minutes high liquidity zone. This is a drop, 3 base candles and a rally candle, drop base rally. This is what identified by our software. This 75 minute zone again fine tuned with 15 minutes time frame. Now I am changing the time frame to 15 minutes. So in the 15 minutes time frame, here we have rally base. See here, this is not a drop candle, failed ERC candle. You just had the hidden body because the close of the candle, you get a big rally candle up to here. So this is the way you can understand this is a rally base rally, not rally base drop. This is the hidden zone. This 15 minute zone again fine tuned with 5 minutes time frame. And look into this 5 minute zone. We have a rally 1, 2, 3, 4, 5, 6 base candles and again a rally candle. This is the lower time frame zone, the 5 minute zone, as an horizon to this 15 minute zone. Lesson 22 you learn lower time frame zone as an horizon to higher time frame zone. And this 5 minute zone, previously it picked up the orders and then started moving up. This 15 minute zone. So that is the reason why here I am not drawing drop base rally with the hidden body. The reason is this is picked up the orders from this lower time frame zone as an horizon. So this is the place you should plan your trades, from where exactly it picked up the orders. Previously also it prices reached into this area. But before I show you that, look into this. There is one more rally base rally, 5 minute zone. This is the horizon for this entire 75 minutes high liquidity zone. Definitely there could be strong order flow, we can plan a trade, but unfortunately today this zone is stopped out. We have to accept that. But here we got a trade. But where to exit is a very tricky today in the live market, because in the live market 15 minute zone was created and again reached the prices to the target, and then after that the zone is violated, this zone. Let me show you what happened. But before that, previously also once prices entered into this fine-tuned, this 5 minute zone. See, this 5 minute zone is the lower time frame zone as an horizon to this entire 15 minute zone. Here also you see Again prices, it picked up the orders and then again it moved. It looks like there is again a drop base rally, but where the actual orders are picked up from this area. So that is the reason why this is the area you can plan a trade again. This LTF zone is always a powerful zone. LTF as an horizon to HTF. Many times you get successful trades. Even today also we got a trade. But the problem is today, the zone was violated today. Pierced actually. See here we got the trade here. Today at 10:25 candle, it entered into this zone. So this is the area prices, and see this is the 15-minute zone. Within the 15 here you have this 5-minute zone. And this 5-minute zone we got the entry today at 10:25 5 minutes candle. After that the zone is pierced. And what is this blue color line? This is exactly the stop buffer. We have 0.20 stop buffer for this. The ATR stop buffer for 3% stop buffer. Today it didn't cross the stop buffer. So exactly reached, and then against prices were started moving up. And here a new zone is created, rally base drop. Here also you can also see a 15-minute zone also here. But 15-minute zone was not very clear. See here, rally base drop. This is not very clear because this candle is also a large candle. So that is the reason why this rally base drop, again fine tuned with 5 minutes time frame to find the exact order flow. So here you have the clarity, rally base drop. After that prices entered into that newly created 15-minute zone, in that this fine tuned 5-minute zone. Definitely you have to exit. You can't expect your target up to here because a new 15-minute supply zone is created. First you see the initial trade where we planned. This is the drop base drop. This is the one we planned. We planned our target. This is supposed to be our target. This is our entry. This is our target. But unfortunately, our analysis failed. Why? Because in the live market again rally base drop is created. This is the 15-minute zone. Now this is going to be our new target. And here we have a fine-tuned 5-minute zone. Exactly the order flow is there. There we planned our exit. Exit means your revised target. This is our revised target. Because of the new zone creation, our target has been changed. Now our target is limited to very small amount. See, after that, see what happened. This zone, how it pushed the prices. This entire zone is violated. This is the zone violated. Not only this zone. Below that we have 5-minute zone as an horizon to this entire 75 minutes high liquidity zone. See here. This 5-minute zone as an horizon to this entire 75-minute zone. This is also violated. That's why the second trade is stopped out. First trade is successful. Even though it is successful first trade, it didn't reach our actual target, planned target. It only reached the revised target. So how much profit we got till this revised target? Because already we took the trade in this candle. When 10:25 candle, we took the trade, and in 11:35 minutes candle, it reached the target. So almost 1 hour time it took to reach this revised target. Most of the time the price struck within this area. So how much profit we got? ABC Capital has given 5,454 rupees profit, which is a 2.2% ROI. Return on the investment is only 2.2%. But okay, something is better because it is already pierced. The zone is pierced. This was our first concern. Once the zone is pierced, and if it is not moving very quickly towards the target and it is moving within the same area, definitely it is some kind of fear scenario. Because there are higher chances it may return and completely zone might be violated. That possibility is there. But luckily what happened, this base drop is created, which is a fine-tuned zone of this 15 minutes zone. Rally base drop. Within this is the fine-tuned 5-minute zone. There again it reached the, now we got the clarity. This is the place we need to exit. So that way you got 5,454 rupees profit. After that, price has sharply moved down. Anyway, this is already pierced. We know that this will be violated completely. In this candle, completely it is violated, and gave a new entry in this particular newly created, the 5-minute zone as an horizon to entire 75 minutes high liquidity zone. It gave an entry. Next candle, it is stopped out. After that, prices were started further moving down, down, down. So in the second zone, actually these kind of 5-minute zones work very well, but today it is stopped out, we have to accept. The second trade, this is the 5 minutes zone as an horizon to 75 minutes high liquidity zone, which has given 1,782 rupees loss, which is 0.7% negative ROI. In case if you take both the trades, still you would have got a profit of 3,672. Both trades together. So this is about ABC Capital. And remaining stocks we did not get a trade, but let us look into them one by one. Aurobindo Pharma, this is a daily high liquidity zone. Already we fine-tuned this zone. Previously we discussed. So that's why I am not explaining this again. So today we didn't get an entry. This because here you have a fine-tuned zone. So we didn't get trade opportunity. So this is not a fine-tuned zone. This is a 5-minute structure is not good here. Previously we discussed. Next one is Glenmark. I think Glenmark also previously I explained how to fine-tune. I am not sure. In case if I am not, let me explain. Rally base rally. This is the Glenmark daily high liquidity demand zone. How I fine-tuned with 75 minutes. Here in the 75-minute zone we have drop, 3 base candles rally, but the actual move has started from here. So I have fine-tuned up to these 2 base candles. I considered this medium-sized candle is part of this leg out candle because the actual movement is started and continuation to this is the candle. Next one is 15 minutes. Here we have a 15-minute zone. We have a rally and we have 3 base candles and then again a rally candle. So this is the way we see part of this is actually overlapped. A part of this zone is outside and part of this zone is inside. This is a medium sized candle, so it's not a leg out, so we didn't draw any zone here. Next, again this 15 minutes area fine tuned with 5 minutes. Now you see very interesting in the 5-minute zone. So here you have a ERC candle, failed ERC candle as a leg-in. You can consider this as a rally because prices were moving up, maybe closed. See, the body is very small. So that's why don't bother about the color of the candle for failed ERC candle. Always you need to look into the dynamic view for the failed ERC candle. Okay, this is the base candle and then again a rally candle with gap up. See, there is a pro gap is there. Let me draw a horizontal line here, the pro gap. Why I am drawing horizontal, I will explain. So this is indicates here a pro gap. This is the starting, the blue color line is the starting of the pro gap. If the risk is within your limit, you can plan your trade at the blue color line. If the risk is within not your management level, you have to wait until the prices reaches to the proximal. Still you feel the risk is high, you have to go to type 2 proximal. But anyway, this type 1 proximal also within the manageable level. So probably you can plan a trade here once it reaches. But today, most of the day, the prices did not enter into the zone today. Almost closing hour of the market, see, the prices entered into just touched the blue color line in this candle. When this is a 3 o'clock 5 minutes. Today afternoon 3 o'clock 5 minutes. After that, see how sharply it moved. So that is the power. Maybe because it is at the closing hour of the market, you didn't plan any trade. But even in the blue color line also, you would not have planned because the risk management is not easy. That too, last half an hour, finding your exit, you won't be getting any RR also. Anyway, we didn't plan any trade. Just I want to tell you, see how much the order flow, how strong the order flow. Today market was like going down, very bearish market today. Even in the bearish market, our demand zones worked. Previously also, you see, we got it, ABC Capital 75 minute zone, we got a trade even though it is a bearish market. Maybe one zone is violated, fine. But one more zone we got a trade. At least we got long trade, some extent we got the profit today. Even though it is a bearish day. And short trades we didn't get any entries today. Prices didn't enter into the fine-tuned area for short trades. That way we didn't get any trade opportunity. What I am trying to say, the power of our high liquidity zones, I want to tell you, even though it is not a trade, but the confidence you must build towards the high liquidity zones, these are the classic examples. See how sharply prices were going down today. But why after coming here only it started moving against the primary price direction. Today primary price direction is down. Why it didn't move earlier? Why only here only? Because of these high liquidity zones, the fine-tuned areas, the institutional exact order flows, that is pushing the prices up. Today, you learn such kind of skill. You are able to find or you are able to fine-tune the zones to find the exact or the accurate institutional order flows. Fine-tuning is not a great technique. You already learned in lesson 16. It is just like moving from one time frame to another time frame. The previous fine-tuned area, inside that again you will be fine-tuning. It may not be inside, it can be at the proximal overlap or it can be at the distal line overlap. But you will be getting a overlapped or exactly inside fine-tuned zones you will be finding. That is the skill already you practiced. Every day, same concept I am explaining you in the high liquidity zones again and again. Any exceptional scenarios, you will be learning from my experience. Some exceptional scenarios like understanding failed ERC candles as a leg-in. Such kind of concepts, time to time you are learning by listening my HLQ zone analysis videos. So over a period of time, definitely you get a very good grip. You get a good confidence that you will be able to do these kind of trades. But only thing we must appreciate, we are in a position to identify high liquidity zones with the help of our software algorithms. Okay, this is about Glenmark. Almost near to the zone it came, but this is at the almost last 20 or 25 minutes of closing the market. So we can't do anything on this. Moreover, it didn't reach the exact entry zone just before it started moving up. So next time again, if our software identifies this zone, I am stressing on this point. Only if your software identifies, then only you have to plan high liquidity zones. As I clearly told you, high liquidity zones are valid only for the next trading session. Bullish bearish trade setups, they are different. Until the trend changes, you can use. Today software identified a bullish trade setup. If the trend is and other factors, your risk management are not changed, tomorrow or day after tomorrow, even after 1 week also, you can use them. But high liquidity zones are different. They are very sensitive zones. Only when software identifies end of the report, next trading day only you have to use our high liquidity 75 and daily zones. Not high liquidity means not about every high liquidity zone I am telling. I am talking about the high liquidity zone strategy. High liquidity zone strategy is different. High liquidity zone is different. Your bullish trade setup also, there could be, the entry zone could be high liquidity zone. They can be used as long as trend does not use, you can use that zone after 1 week also. Here I'm not talking about those high liquidity zones. I'm talking about high liquidity zone strategy that we developed by using 75 minutes and daily high liquidity zones. That strategy only applicable only for one day. The day when your software identifies end of the day, next day only they should be used. Hope I made it clear. Okay, this is about Glenmark. Next, the last one is NTPC. NTPC is a daily high liquidity supply zone. This is already, we fine-tuned this zone, I already explained. Today also prices did not enter into this fine-tuned areas. How I fine-tuned already explained. Because this is the stock we are getting for the last 3-4 days. Okay, this is about the high liquidity zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.